And Meridian Energy is, of course, one of the three government-owned electricity generating companies which the government says that if re-elected they will sell half of. Beg your pardon? 49% of. 49% of. Half of. Mr. Chairman, Mr. Chairman, if the debate was between 49 and 50%, we probably wouldn't be having it. The real debate is here: why are the government proposing to do this? And in the context of this debate, what is wrong with the performance of this company in its current ownership structure? Well, actually, the answer to that is there's nothing wrong with its performance in its current structure, and indeed the Treasury, in its papers released with the budget, said that it's unlikely that there's going to be a material improvement in the way in which this company operates as a consequence of half of it being privatised. Mr. Chairman, the Financial Review report from the Commerce Select Committee shows that in the year under review, the net profit of Meridian was $184 million. It paid two dividends, one of $89 million, followed by a final dividend of $68 million. A total of around $150 million in dividends in 1 year alone. Mr. Chairman, it makes no sense to sell these companies, and Meridian is a good example of why it does not need to occur. Now, why then is the government doing it? Why is the government doing it? Because they've got New Zealand into a situation of a $16.7 billion deficit, and they've given themselves the excuse, they say, as a consequence of their own conduct in putting forward unaffordable tax cuts in earlier budgets. They now say they need to do this and that they're justified in doing it. I want to deal with one of the other issues. They say that this is going to improve capital markets in New Zealand to give ma and pa investors something, Kiwi savers, more or choices for what to invest in. Well, the point is, firstly, these assets are already owned by New Zealanders through the government. Every New Zealander owns them, not just the top 10% who so profited under the National Party tax cuts that they got 42% of those income tax and therefore are likely to be disproportionately the people who can buy these assets if they're flogged off. But the underlying principle that the government has to sell well-run government-owned assets in order to help the private sector is wrong. Are we really so depressed about the ability of New Zealand's private sector to generate good investment opportunities that we have to sell what already exists in the government balance sheet to the private sector? What a narrow vision of New Zealand's economic development in the future. Changing who owns these companies will not change the productive output of New Zealand's economy one iota. The companies will still be producing electricity. The only thing that could change to the detriment of our productive sector is that electricity prices will go up. Why do we know that? Well, we hear the government saying, well, for a start, they say that the private sector is always better at running businesses. And they quite rightly point to the fact that there is an increased private sector discipline to maximise shareholder returns. Well, we agree with that. We agree that private ownership of assets does increase private sector disciplines to maximise shareholder returns. That's why, on average, Contact Energy and Trustpower charge more for electricity than the SOEs. And that's why, if these companies are privatised, we will see maximisation of shareholder returns in two ways. Yes, we will see further trimming of costs to a minor extent, although I've got to say salaries and those sorts of overheads are a minor proportion of total costs in these sorts of companies. But the other side of that same coin is if you accept that private sector disciplines minimise costs so as to maximise shareholder returns, they also maximise prices. It's two sides of the same coin, minimising costs and maximising prices. And that's particularly problematic in this area because we know from reports of the Commerce Commission that the market is not competitive. We had a report produced under the auspices of the Commerce Commission that came out in May 2009 that found that in the period under review, New Zealanders had on average been overcharged
Mr Speaker.
The Honourable Tony Roll.
Mr Speaker, reading the financial review of Meridian Energy, it's most interesting to notice the focus of the report. The committee noted Meridian's growing wind portfolio and the number of options that had in the pipeline around this area. There were a number of questions around a West Coast project and its impact on environment, and apparently Meridian stood by this project, and also talked about Meridian's offshore renewable projects being supported by the committee. Of course, the other strong feature of any review of Meridian Energy would be the impact of the Christchurch earthquake. And I think in light of the events of yesterday, I think we can all appreciate just the sense of frustration, anger, disappointment, whatever you want to call it, happening in Christchurch when so many people have sort of lived on the edge for so long, and to have yet another earthquake is obviously very destabilising and worrying for a lot of families down there, but strong leadership is being provided by the authorities, I'm absolutely sure. An important part of Meridian Energy, of course, a company with strong links to Christchurch, is the work that they are doing to assist the electricity authorities in that whole Canterbury area in what they're doing. The member opposite spoke previously about some of the government's thinking around the mixed ownership model. I have to say, you wouldn't think that they remember, that they even would acknowledge that electricity prices went up 72% in 9 years under that party opposite. Over those 9 long years, power prices went up 72%. But they can stand up now and wring their hands about the effect of electricity prices on consumers, but just ignore what happened during those Clark years when prices went up 72%. Look, ownership is not a feature of price rises, and that is not an argument to be accepted. But the reason why the government's looking at a mixed ownership model, much like we have with Air New Zealand, which was a model that was supported under the previous government, is that there's a number of reasons why we should look at a mixed ownership model with respect to Meridian and a number of other companies. Now, the first of all is a recognition that the New Zealand economy, the New Zealand government is facing huge demands on capital. Over the next 4 or 5 years, we're needing about $32 billion of capital to invest in vital public infrastructure like roads, like hospitals, and like schools. Now, we can face the reality we might have to borrow that money, or we can say that some of our current capital is invested in areas that we could free up and move into higher priority areas. And I think hospitals and schools and roads, building that infrastructure is vital for the future of New Zealand. Secondly, a mixed ownership model provides an opportunity for New Zealanders to invest directly in assets that are important to the New Zealand economy. You know, I can recall going to a public meeting in my electorate, Mount Maunganui, last year. It was really a fascinating meeting because we were talking about the fact that the government was trying to move the incentives to encourage people to invest not in residential property but in productive investments. And one of the guys got up there, one of the older guys got up and said, well, if we're not to invest in residential property, what do you want us to invest in? Because they'd spent years investing in blue chip, years investing in risky finance companies, and not having the opportunity to invest in blue chip companies that help build the infrastructure of New Zealand. And the mixed ownership model will give those people an opportunity to have a high-class investment in the future of New Zealand. It will allow them to have a secure investment, a better investment, than they would have other options to invest in. It also gives our superannuation funds an opportunity to invest back in New Zealand. People's Kiwi Saver, people's savings can be invested in a good quality New Zealand company, and there will be improved opportunities for that. And there will also be opportunities for improved performance by the company. because what we know is there's much more scrutiny on the performance of the publicly listed energy companies and their capital intentions and their behaviour in the market than there is on those that are government-owned businesses. So there are real opportunities in using a mixed ownership model to benefit Kiwi mums and dads in the next few years.
Members, the question is that the report of the Commerce Committee on the 2009-10 financial review of Meridian Energy Limited be noted. Those of that opinion will say aye. Aye. Contrary, no. The ayes have it. I understand that the next entity members wish to debate is Mighty River Power Limited. The question is that the report of the Commerce Committee on the 2009-10 financial review of Mighty River Power Limited be noted.
Mr. Chairman.
David Parker.
Mr. Chairman,